The Economic and Financial Crimes Commission has arrested the controller of the Kirikiri Maximum Security Prison, Mr. Emmanuel Oluwani, and the correctional facility Dr. Hemerson Edwin. Both men were arrested for allegedly giving exaggerated medical reports that facilitated a referral for convicted internet fraudster Hope Aroke to be treated outside the prison. EFCC spokesman Wilson Uwujaren, in a statement, confirmed the arrest, which took place yesterday, Monday, November the 25th. He says that the suspects have given useful information to the Commission about their alleged involvement in the crime. Mr. Aroke, also known as H-Money, who is serving a 24-year jail term, had masterminded a mega scam to the tune of over $1 million. 6 students of the Federal University of Technology, Akure, have been expelled from the institution for the physical bullying of a fellow student. A statement from the Deputy Director, Corporate Communications at FUTA, Adebanjo, says that the expulsion follows the recommendations of an investigative panel that probed the incident, which took place in an off-campus hostel on Saturday, November the 16th. According to Mr. Adebanjo, the punishment meted out to the affected students is not to pander to the justifiable public outcry that greeted their odious act. Rather, he says that it is in tandem with the rules and regulations as contained in the Students' Code of Conduct, as stipulated in the University Handbook and Oath of Matriculation, which all students are made to sign and subscribe to. Now to the economy. The Monetary Policy Committee of the Central Bank of Nigeria, the CBN, has retained the benchmark rate at 13.5%. The Governor of the Central Bank of Nigeria, Mr. Godwin Emefiele, announced this decision at a news conference after a 2-day MPC meeting held at the Apex Bank's headquarters in Abuja. He explained that the committee unanimously voted to retain the MPR after the rates were reduced from 14% to 13.5% in March 2019, the first time the MPR was reduced since July 2016. Our correspondent Amaka Okafo reports.
The CBN Governor, Mr. Godwin Emefiele, is surrounded by members of the Monetary Policy Committee after a 2-day meeting. Briefing journalists at the Apex Bank headquarters, Mr. Emefiele says the MPC decided to retain the monetary policy rate at 13.5% alongside other monetary policy indices.
The improvements in the macroeconomic indicators, such as the gross domestic product, the non-performing loans ratio, the capital adequacy ratio of the banks, as well as the loan-to-deposit ratio, suggest that the current monetary policy stance is yielding results. It therefore feels that maintaining the current stance will be necessary in order to sustain these improvements. In summary, the MPC voted to 1. Retain the MPR at 13.5%, 2. Retain the asymmetric corridor at plus 200 and minus 500 basis points around the MPR, 3. Retain the CRR at 22.5 and retain the liquidity ratio at 30%.
Mr. Emefiele believes that the effect of the recent closure of Nigerian land borders is temporary.
Significant investment has been made over the last 3 years to sustainably increase domestic food supply. It is therefore expected that the outcome of these interventions will close the supply gap already envisaged in the medium to long term, including dampening domestic prices. It therefore expressed support for the temporary closure of Nigeria's land borders, noting that securing the country's land borders should be further enhanced.
The MPC, however, urges the federal government to review its oil benchmark of $57.
On crude oil price, the committee noted the lull in the futures market, suggesting that prices will remain relatively weak into the foreseeable future. The committee therefore urged the federal government to reconsider its 2020 budget oil price benchmark of $57 to the barrel to build buffers.
The central bank governor assures that despite the fall in federal reserves, there is no cause for alarm for the Nigerian economy. Amaka Okafo, Channels Television News.
And joining us on the news at 10 is the CEO of Financial Derivatives, Mr. Bismarck Ruwani. I want to thank you so much indeed for joining us on the news at 10. Any surprises with this release of the MPR, the 19th status quo since 2016?
Yeah, status quo 19 times since 2016, a lot of status quo. But this time, it's a prudent decision. It's a wise decision. Why do we say that? First of all, what happened? They maintained the status quo. Why did it happen? Because at this point in time, the interest rates have actually come down. They used unorthodox methods and other guidelines to bring down interest rates. So what we've seen in the last 1 month is that 91-day treasury bills have come down by as much as 3%. Lending rates have come down by as much as 4%, and deposit rates have come down by as much as 4 to 5%. So the interest rates are down already, and that is also it. There are unintended consequences of that, but generally speaking, the interest rates have come down. Lending has increased.
That's a stimulant.
To stimulate growth, but the total lending, when you talk about what the central bank governor said, about 1.9 trillion in a $147 trillion naira economy, it's not that material, but it's a move in the right direction. But it moves, it creates some form of stability, financial stability at this point. Now, if you go further on the slides, as you can see, the biggest problem here is inflation. In the last 3 months, we've seen inflation go from 11.02 all the way to 11.61. And it's projected that it will go as high as 11.88 by November. Why is this happening? There's what we call high-powered money, which is cash in circulation plus reserves. And that's talking, there's that kind of saturation taking place. There are bottlenecks and aberrational issues, like border closure and logistics issues. The wage-induced inflation has not come in yet because the wage arrears are going to be paid in December. However, the naira has been stable in the foreign exchange market, and that has been the good news there.
So also you're looking at, you call it thank God.
Thank God.
So what's the implication of oil to the economy with this, with the MPR juxtaposing that with the inflation up again by 11.61%?
No, GDP went up, increased by 2.28% in the third quarter, which was good. But if you decompose that GDP, you find oil sector activity went up by 6.53, while the non-oil sector increased by 1.24 or something like that. Now, we did that because in the third quarter, Nigeria actually bust the quota, the OPEC quota, and benefited from that. OPEC is very strict now, and the meeting is on the 5th of December. So Nigeria is beginning to reduce its oil activity. But the good news as well is that transport, construction, manufacturing, and ICT and agric actually grew fast. However, the economy is not out of the woods yet because if you take out oil, you will see that we're still struggling. But if you take the economic scorecard, as you can see, there were 8 variables that we looked at. 5 of them were in green, which is real GDP, money supply, exchange rate stability, credit to the private sector, and lending rates. But the 3 reds are quite significant. 1, inflation is up significantly. External reserves are down, and the central bank governor alluded to that, and stock market capitalization is down. So how does this impact you as a worker? Now, 3 months of border closure, what happens to you? You're going to be buying rice this December at 27,500, irrespective of the whatever it is, border closure. Chicken is up to 1,800 for a 1 kilogram piece of chicken. Gari is up to 6,900. And also we've seen margarine also go up. Now, on the good side for you, new yam is down to 500 naira, and tomatoes is down to 10,000 naira, and beans is down to 15,000 naira. Now, for the ordinary worker out there who is watching this program, asking what does this mean to me? Interest rates have been kept on hold, money supply, there's central bank intervention. The reality is that you are going to find school fees increasing in January. You are going to find your house rent also increase. Transport has been flat, and your minimum wage is increasing. Now, but even the rich are crying more than the poor this time. Why? International school fees flat because of the exchange rate stability. House rent has gone up. Airfares have increased because they're afraid of being kidnapped. Everybody's flying rather than going by road. And corporate profits and dividends are down, and stock market capitalization down. Medical bills are also down. So the rich are also beginning to cry a little bit.
But in the midst of that,
Well,
you say there's a place where you can find some level of comfort in Nigeria still.
Yes. So the best places to live, we looked at the 36 states. The 5 states with the lowest misery index. Strangely enough, number 1 was Osun State with a misery index of 22.06. That is, you had unemployment to inflation. Number 2 was Oyo State. Number 3, Katsina. Number 4, Lagos. And number 5 was Ondo State. So mainly states that have common borders with a, who enjoy informal trade, but also have high IGR. And now, what are you going to expect this Christmas? 1, you're going to have a strong Naira in this Christmas, and strong Naira during the Christmas because visiting friends and relatives are coming in from abroad, and we had a bumper cocoa harvest. We are having 240,000 tons this year, as against 220,000 tons last year. And the price of cocoa is up to $2,300 a ton. Having said that, there are external vulnerabilities. And so what are you going to see in this December Christmas? You're going to have a budget approved of 10.3 trillion. That's okay. Minimum wage we paid. It has an impact on money supply and plus the arrears from April. You're going to have headline inflation increase a little bit more to 11.9%. OPEC will decide on the quota and keep our quota, I hope, where it is, at 1.67 million barrels a day. And then external reserves will slip a little bit to about $38 billion. Central bank governor says not to worry about it. I don't think there's any need to panic, but it's something to watch. And finally, the banks will struggle because they have to comply with the new loan-to-deposit ratio of 65%. So there'll be loans available. There'll be NPLs may struggle, but generally speaking, December 2019 will be slightly better than December 2018. But the real struggle is ahead because of the unintended consequences of some of these problems.
Do you believe it will be a Merry Christmas for a lot of people? Because rice will be sold at 27,000 naira.
And if you don't eat rice, you eat something else.
Okay, so that's the final note. You don't eat rice, you eat something else.
Yeah.
Many thanks indeed for
Eat
talking
yam.
to us.
All right.
Yam food. That is down at 500 naira
Yeah.
for the tuber. Many thanks indeed, Bismarck Rwani, the CEO of Financial Derivatives.